BigBear.ai Holdings Inc. is currently trading at 6.10 USD, which represents a decrease of 0.055 or 0.89% during today's session as of 12:08 p.m. EST on Wednesday, January 28, 2026. While most traders looking at a slight intraday dip might assume this is just standard noise in a volatile small-cap stock, the reality under the surface is far more complex. Today's price action is actually a muted reaction to a massive structural shift in the company's capital stack. BigBear.ai just announced the full conversion of $125 million in convertible senior secured notes into common stock. On paper, this looks like a straightforward dilution event, and usually the market would punish a stock for flooding the float with new shares. However, because this move essentially wipes out a massive debt overhang and cleans up the balance sheet, we are seeing a strange tug of war between the expectation of price suppression from new supply and the reality of a much healthier, debt-free enterprise. This is the kind of nuance that often gets lost if you are only looking at surface-level tickers on a standard trading platform or checking your balance on a Fidelity mobile app once a week. When you look at the recent momentum of BigBear.ai, you have to reconcile the massive hype surrounding anything related to artificial intelligence with the cold, hard reality of government contracting cycles. For the last several weeks, the stock has been bouncing between a low of 5.60 and a high near 6.55. This range-bound behavior is frustrating for retail investors who are used to the parabolic runs we see in something like NVIDIA stock. But BigBear.ai is a different animal entirely. It operates at the intersection of national security and predictive analytics. The common belief among the bull crowd is that because BigBear.ai is a pure-play AI company, it should eventually catch the same tailwinds that propelled the trillion-dollar giants. The reality, however, is that while NVIDIA stock provides the hardware, BigBear.ai has to prove it can provide the specialized software solutions that actually result in sticky, high-margin revenue. Right now, the market is skeptical. Trading volumes have been elevated, often crossing 100 million shares in a single day, which suggests that institutional players are actively repositioning. We see names like Vanguard and BlackRock holding significant stakes, but the short interest remains stubbornly high at nearly 20%. This tells me there's a massive divide between those who see a lean, mean AI machine and those who see a company that might struggle to scale without continuous share issuance. If you are using an online investment tool or checking for investment help on various investing sites, you probably see BigBear.ai labeled as a high-risk, high-reward play. It is not like Apple stock where you can reasonably predict cash flow and buybacks for the next decade. Instead, BigBear.ai is fighting for dominance in a world where the Department of Defense and other government agencies are notoriously slow to move. The recent acquisition of CargoSeer is a perfect example of this tension. By acquiring these assets, BigBear.ai is moving aggressively into the customs and border protection space. The expectation was that such a move would immediately broaden their moat. The reality is that integration takes time, and the market is currently more focused on the upcoming special meeting of stockholders on February 18th. At that meeting, the company is looking to double its authorized shares. For someone managing an individual brokerage account or using a self-investing approach through a Fidelity brokerage, this is a red flag. Doubling the authorized shares usually signals that more dilution is coming, yet the management argues this is necessary for future acquisitions and flexibility. It's a classic gamble on growth versus current value. The intraday movement we are seeing today is reflective of a market that is trying to digest the sheer volume of news coming out of the McLean, Virginia headquarters. Beyond the debt conversion, we have seen recent partnerships with the AD Ports Group in the United Arab Emirates and even digital transformation work for the New England Patriots. These are flashy headlines, but they haven't yet translated into the massive revenue growth that the Zacks consensus or other analysts are demanding. In the last quarterly report, they missed on earnings per share by a penny, reporting a loss of 7 cents. While a 1-cent miss seems negligible, in the world of small-cap AI, it can be the difference between a breakout and a breakdown. If you're comparing this to the performance of some of the larger tech names you might find in a Schwab Intelligent portfolio or a SoFi robo-advisor, the volatility is jarring. You have to be comfortable with 8% swings in a single day, which we saw just yesterday. At this point in the analysis, I want to hear from you directly to get a sense of the sentiment in this room. Comment below how many shares of BigBear.ai you currently hold, or if you are waiting for the February 18th vote before making a move. Seeing the community's positioning helps all of us understand if the retail side is as divided as the institutional side. To understand why BigBear.ai is in this position, we have to look at what they actually do. Their business model is built around 3 core modules: observe, orient, and dominate. It sounds like something out of a techno thriller, but it's actually a very logical way to handle massive data sets. Observe is about data ingestion. Orient is about machine learning and making sense of that data, and dominate is the visual intelligence that helps commanders or CEOs make decisions. They have been very successful with the land and expand strategy, maintaining a high win rate on government recompetes. However, the reliance on these government contracts is a double-edged sword. When the government goes through budget cycles or face-offs in Congress, companies like BigBear.ai feel the squeeze immediately. This isn't like a consumer-facing app you might find on the Robinhood app where revenue is driven by millions of small transactions. This is a business where a single delayed signature in Washington can tank a quarterly report. Looking back at the older reports and past performance, BigBear.ai came onto the scene with a lot of promise but struggled with its capital structure early on. The heavy debt and the complexity of the convertible notes were a drag on the stock price for a long time. That is why today's news about the conversion is so significant. By eliminating that $125 million debt burden, they have effectively cleared the runway. The question now is whether they can actually take off. Institutional activity suggests they are being given a chance. When you see increased positions from firms like Jeed Capital and Charles Schwab Investment Management, it indicates that the smart money is starting to see the balance sheet cleanup as a turning point. They aren't just looking for a quick trade, they are looking at the long-term potential of a company that is finally getting its house in order. If you were using an interactive brokers platform or looking at sophisticated fidelity ETFs, you might notice that BigBear.ai is often lumped in with other speculative tech, but its niche in national security provides a layer of protection that many other AI startups lack. The government isn't going to stop needing predictive analytics for border security or human trafficking detection. The CargoSeer deal reinforces this. It's not just about AI as a broad term, it's about specific, mission-ready solutions for very difficult problems. This is where the reality of their business model starts to exceed the skeptical expectations of the market. While people are worried about the price today, they might be missing the fact that BigBear.ai is becoming an essential part of the infrastructure for global trade and security. Looking toward the future, the outlook for BigBear.ai depends heavily on 2 things: the outcome of the February 18th stockholder meeting and the March 5th earnings report. If the company gets approval to increase its shares and then follows that up with an earnings beat that shows the CargoSeer acquisition is already contributing to the top line, we could see a massive squeeze of the shorts. Those who are bearish on the stock are betting that the dilution will be the only story. If the reality shows that the dilution was a necessary evil to fund massive growth, the narrative flips. This is the same kind of tension we see in the early stages of many successful tech firms. You have to burn some furniture to keep the house warm while you build the addition. For those of you doing your own online investing or managing a SoFi active investing account, you have to decide if you believe in the management's vision. Amanda Long has been aggressive in restructuring the company, and the results are starting to show up in the balance sheet, if not yet in the stock price. The comparison to other platforms is inevitable. Whether you prefer the simplicity of the Robinhood trading platform or the deep analytics of the interactive brokers trading tools, the data for BigBear.ai is pointing pointing toward a major crossroads. We are moving away from the hope phase of AI and into the execution phase. In summary, the current price of 6.10 USD is a reflection of a market that is cautiously waiting. The expectation is that the recent debt conversion and the proposed share increase will dilute value and keep the price suppressed. The reality is that BigBear.ai is arguably in the best financial shape it has been in since it went public. It has eliminated significant debt, expanded its technological footprint through the CargoSeer and Ask Sage acquisitions, and is deepening its ties with both domestic and international government entities. We have seen how high short interest and institutional accumulation can create explosive situations in the past. While this isn't the same as the steady climb of Apple stock or the relentless force of NVIDIA stock, BigBear.ai offers a unique exposure to the defense side of the AI world that is hard to find elsewhere. When you sit back and look at your Fidelity Wealth Management report or your Robinhood investments, you have to ask yourself if you're looking for a safe harbor or a high-stakes growth play. BigBear.ai is clearly the latter. The contrast between the market's fear of dilution and the company's focus on balance sheet strength is the central theme here. As we move closer to the February and March catalysts, the volatility will likely increase. This is a stock for those who understand that